Sure, skip this ad just like you skip on buying Amazon stock, Google and Apple. I know you've had this ad and you probably always skip it like I do. Well, I don't blame you because investing can be quite intimidating and brokers make it even more difficult. They only allow certain people from certain countries on their investing platforms. But that's not the case now. You can invest no matter where you're from and you don't need to be an expert to start investing. Hello guys, welcome back to me talking about the one and only thing we all love, money. In today's video, I want to share with you how to get started with investing, the platform that you need to use, what you need to know before you start investing, and how to make money from it. But before we get into this video, please don't forget to hit the like button right away so that I won't have to annoy you during the video. YouTube algorithm loves it when you hit that guy. And of course, don't forget to smash the notification button so that you won't miss out on my future videos. And don't worry, I won't spam you. I only post twice a week. You can invest blindly and get away with it, but as a beginner, there are things that you need to know before you start investing. Number one, EPS, earning per share. This indicates how much a company makes for each share of its stock. EPS ranges between 1 to 99 and 99 being the best. Another important factor that you need to know before investing is PE ratio, and that is price to earning ratio. PE ratio is used to assess if the company is overvalued or undervalued. If a company has high PE ratio, it's either the company is overvalued, meaning the stock price is higher than the earnings, or it means investors are expecting growth. So higher PE ratio does not always mean the stock is overvalued. As an investor, you may want to buy undervalued stocks because the stock price is much cheaper relative to the earnings. But also you must remember that if a company is losing money, they will have zero PE ratio. Thirdly, as a beginner in investing, you need to know if that company that you want to invest in pays dividends. Not all companies pay dividends, so you have to do your research and check if that company pays dividends, especially if you want to make money with your investments without actually selling your shares or your stocks. The main three things: PE ratio, dividends, and EPS. You need to know those things and you need to check for each company. Where can you search for such information? You can type directly on Google, for example, the company's EPS or PE ratio, or you can use websites such as Yahoo Finance. And Yahoo Finance does not only show you the PE ratio or EPS, but they show you everything for that company. So you can then see how the company has been performing. If you're investing in South African stock, for example, you can also use asashares.com. They have this information. Investing platforms that you can use as a beginner. When starting out, you can use a platform such as EasyEquities. This is a South African based company that allows people to invest in South African stocks as well as US without having to pay any minimum. When you go to their website, which I'll leave down below, you need to create an account first, and then after that you need to fund your account. Within EasyEquities, you can have different accounts. You can have ZAR account, USD, and retirement account. ZAR account, it can only be for South Africans and it allows you to buy South African stocks. And you can have USD account. USD account allows you to buy American stock. Good thing is this account is for both South Africans and international people as long as you are not from the US. Or you can also choose to deposit your money into your retirement account. One of the questions that most people ask regarding EasyEquities is if you need a tax number. Fortunately for EasyEquities, tax number is not a must. If you are a student, for example, you can still be able to invest with EasyEquities even if you do not have a tax number. You just have to specify that you don't have a tax number and you have to tick the reason why you don't have it. In this platform, they offer both individual stocks as well as ETFs. ETFs are just a group of companies in one basket and they are traded as one stock. Another investing platform that you can use in South Africa is Satrix Investing. Maybe you've heard about Satrix Top 40. These are the top 40 companies in the JSE. If you want to buy Satrix Top 40, for example, you can invest directly using the platform, or you can buy Satrix Top 40 using EasyEquity platform. And with EasyEquity platform, they have fractional shares, meaning you don't have to pay the full price of the total top 40. You can buy a piece of Satrix Top 40 or any other ETF. If you decide to buy Satrix Top 40, for example, using the Satrix investing platform, you would have to pay a minimum of 500 rands every month because they do not offer fractional shares like EasyEquities. Another investing platform that you can use in South Africa is Sanlam. Think of Sanlam as robo-advisors. You do not execute any trade, you do not buy or sell, you just put money and they do everything for you. But if you invest with Sanlam, you do have to pay a minimum of 500 rand per month, or a lump sum of 10,000 rands. Sanlam uses unit trusts, and unit trusts are different from ETFs. The main difference is they invest their money on assets that are not publicly traded. They take that money from you and other investors and they invest it on different assets or different bonds. Good thing with Sanlam is you pay this money every month or once off, and they invest the money for you. You don't buy anything or sell. Everything is done by them, and they create a portfolio for you based on your risk tolerance and your investing goal. Although this platform is not as flexible as EasyEquities, where you can buy and sell whenever you want, you can withdraw your money or your investments whenever you want, but of course it takes about 3 days for them to give you the money back. As a beginner, which platforms should you choose? Honestly, it's up to you. If you like the flexibility and you want to learn trading and you want to trade yourself, you can start with EasyEquity, where you buy or sell and learn more about stocks. But also remember that if you're going to be trading for yourself using EasyEquity, for example, you need to be reading about companies that you want to buy. But if you still want to invest but you don't want to go through the process of buying and selling, you can invest through Sanlam, Cetrix or Allen Gray, because they do everything for you. You just pay the money. But remember, they do not have individual stocks. They have ETFs as well as unit trusts. How do you make money from your investments? You can make money by selling your shares, but this is only true if you are selling at a higher price than you bought. If you decide to sell your shares when the company is already losing, then you will lose money. You won't make any money. You can also make money through dividends. If the company pays dividends, you can withdraw those dividends and leave the rest. The more shares you have or the more stocks you invest in, the more dividends you'll have. So if you're starting out and you don't have a lot of money to invest, it's unrealistic to think that you can live off your dividends, because dividends are never that much unless you have a number of shares or a number of stocks. Investing is not a get rich quick scheme. Just because you're owning Amazon or you're owning a part of Amazon or Apple doesn't mean that now you're gonna have money. So don't let the excitement get into your head. You can lose money even if you're only investing in these big companies, because they also go through rough patches and they lose money. The trick is to invest long term, because even if the share price goes down, after a while it might go up again and you'll still gain something. But if you're in a rush or you want to make money quick, you may lose a lot of money, because the moment it starts dipping, you may be scared and you want to sell. But sometimes you just have to let it go down until it goes up again. And that's it from me, guys. If you have any other question about investing, just drop a comment down below and I'll try to reply as soon as I can.